Top of mind for so many people in the market right now is whether or not we're in a bubble. This concern is completely understandable because after years of double-digit year-over-year growth, we experienced a bit of a slowdown in the summer of 2018. This is understandable considering the rapid rate at which prices increased both month over month and year over year. At the end of the day, this was simply not sustainable. Several factors influenced this, including broader geopolitical concerns with regard to trade wars, etc., some stock market volatility that we experienced in the last part of 2018, coupled with, frankly, an increase in supply. Supply and demand is so critical to any housing market, and Seattle is no exception. The good news is this: mortgage interest rates continue to be at historic lows, and demand for housing in our area continues to be strong. Yes, there has been an influx in inventory, but statistically speaking, that additional inventory is not enough to assuage the demand that we are experiencing in our region. For those of you concerned that we are experiencing a bubble, we have to take a look at what happened in 2006, 7, and 8 when we had a real bubble. It's important to recognize that the dynamics that were in play during the housing crisis are simply not in play today. We have stricter loan guidelines for one. Additionally, the majority of people in the market to buy a home today in this region have significant credit scores and high down payments. This would enable them, in the unlikely event that we were experiencing a correction in the housing market, to not end up being underwater on their loans. When I think about what the Seattle housing market experienced in the tail end of 2018, I don't like to talk about declining real estate values. That is simply not the case. Rather, I like to think about a car traveling at 75 miles an hour and suddenly realizing that the speed limit is in fact 55. So that shift, that deceleration from 75 to 55, puts them at the normal pace for the freeway. We are in a market right now where things are starting to normalize, but just because they're normal doesn't mean they're bad. The truth is, the United States has added a record number of jobs for a consecutive 98 months. Unemployment is stable at 4% and wage growth is on the rise. Thinking more locally, demand remains strong, and we have an amazing sector of tech jobs that continue to attract highly qualified, high-paid individuals to our region. And now, with Amazon poised to become one of Bellevue's biggest employers, we can expect to see demand rise again on the east side. It's really important in this day and age of fake news and scintillating headlines to engage the services of a real estate professional who can help you understand the true story about what's happening in the market and help you make an informed decision with clarity and confidence.